How bad is this crash going to get? What stocks am I buying to actually benefit from this serious crash? What does the Federal Reserve predict going to happen with this economy? Hang on. This is not financial nor professional advice. This video is for entertainment only. Hey everyone, what a crazy kangaroo market we have now. On the day that the Fed announced its rate decision, I think it went up and down. Uh, what I was managing, I was ahead 60,000 and below 60,000. Twice in the same day. I ended up 60,000 on the day, fortunately, or unfortunately, depending on whether you're shorting or not. But I think we're in a major crash. It's going to continue to go down. The S&P 500 is around 3750 right now. The June low of this year was at 3,600. We're going to at least reach that. And I think we're probably going down to 3,200. So it's a major crash. It will be the low of the year. It's a chance to buy in at that point, I think, unless it just keeps crashing. When you get a major crash like this, it tends to overdo it. 3,200 is being optimistic at this point. And when you get crash day after crash day after crash day, it tends not to be interrupted very much. I mean, there's brief spurts of a mania, of a relief mania that kicks in, and you can see it during the day even. Oh, this is it, it's over. It's not over, not by a long shot. The NASDAQ, which is over 11,000, it's been hanging around 11,400 and some. It's probably going to go below 10,000 to like 9,600. That's my best guess. The two stocks that I look at, and this is especially if you trade technology stocks, which I like to trade, are Tesla and Apple. I can just about follow Tesla and Apple to see how my stocks are doing, my technology stocks are doing, which most of my stocks are, aside from the inverse funds. But if I follow Apple and Tesla, it'll give me a good idea of how likely my bullish funds are likely to do. Tesla recently lost the battle at 300, and then the battle at 290 started in earnest, okay? And then it started to fall below 190. And it's going to do this all the way down because as you hit each decade point, each 10 points, the 280s, the 270s, the 260s, at each point, there's people waiting to buy, okay? And the algorithms, they have this in mind too. They know how people trade, and they're going to set it up. And people are going to set in automatic buy orders at these different 10-point levels because that's human nature. And so you're going to get these battle at the different 10-point spots, especially with Tesla, because you have this whole cadre of people who are just waiting to jump in on Tesla at a lower price. But it's going to ultimately fail. I mean, Tesla and Apple, part of the way you will know that the market is done going down is that it stops going down on Apple and Tesla seriously. They will be the last to fall, and when they're done falling, the market and especially technology is probably done falling. Apple, the battle used to be at 160. It's around 150 now. Soon it'll be at 140, and so on. So These have been holding up the market, and they've been putting on a valiant fight, but they are overvalued. And we have to have the flush. And the flush is when the VIX goes over 40. And that's been a good guideline for me. To show you how tenuous Tesla's position is right now, it was fighting at the 190s, and it went below 190 because the news was that over 1 million Teslas were being recalled because of a faulty mechanism on the power windows. The safety regulations require that the power windows be able to detect when there's an object in the way between the window closing and the seal, and the object you worry about most is somebody's fingers in the window, and the machine should stop. The power window should stop at that point. And there have been no incidents where anybody's gotten hurt, but they were testing the various parts, testing how safe they were, and they were concerned enough about it that they're making Tesla recall 1 million vehicles. Now, these things happen. It's a minor thing. I mean, it's a thing that has to be fixed, but it's relatively minor, and things like this will happen. Tesla hasn't been around that long. There's going to be minor things like that happen, and they will recall it, and they will fix it, and it will be fine. But traders use this as an excuse or a reason to sell. They knew it was bad news. What this market can't take is any thought of bad news. And so they used that news to go below 190. And I think that's what you're in store for. If there's any bad news, good news won't necessarily move it up much, but bad news will move it down for sure. And that's what happens when you're in a crash. I'm going to talk about inverse funds now. Why? Because that's the only thing that's really been working consistently since about April. And since about April, with the inverse funds, I've made up for the losses, and they were significant. They were like 200,000 or 300,000. Okay, I made up for those losses. Then I made another 350,000. Okay, and you've heard me say this before. It's because of SQQQ, the shorting the 100 largest companies on the NASDAQ, which is the QQQ. You put an S in front of it, and you're shorting the 100 largest companies on the NASDAQ, and it's triple leveraged. So you get $3 for every dollar the QQQ goes down. And it's just been outstanding. It's bailed me out every time I've been wrong. And when I've been wrong, it's been trying to construct a bullish portfolio. I'm still buying some nibbles, I call them, of stocks, because I want to have a point of comparison when I buy them in the future, and I anticipate buying into them seriously in the future. But I got anywhere from 50 to 100,000 of nibbles that I keep in the background, and I will jump in when I think we've started to take off from the bottom. I'm not going to hit the exact bottom. I'll miss the first 5%, but I'm very glad to miss that first 5% because it's such a mistake to jump in too early. You're much more likely to get burned by jumping in too early than waiting a little bit. And the stocks that I'm shorting with successively are SQQQ, as I said, and DRV, which is a triple leverage inverse fund on real estate. DRV has been a very successful investment. You get $3 for every $1 that the real estate index goes down. And it's been more successful in the last week, percentage-wise, even than SQQQ, which is saying something nowadays. So I plan to keep it. for a while. It's tends to be more long-lasting. Real estate may go down slower, but it seems more certain. I think real estate will go down 10 to 20%, and you will get triple leverage on that, which is good to have. I also have the triple leverage inverse fund, Yang, Y-A-N-G, which is a triple leverage inverse fund on Chinese companies that trade on American stock exchanges. And that's been profitable. It's kind of a steady gainer. The Chinese are in worse shape than the United States is, and they look to be getting worse. Their real estate crash reminds me of the United States in 2008. They're sort of going through sort of the same thing, although nothing is the same in China because they do things differently. For instance, they have people pay for their houses while they're being built, which is always a bad idea. And I've heard of some people doing that in this country, and that's it amazes me anybody would do that. It's not a good idea. I also own the double leverage inverse fund on the gold miners, which is DUST, D-U-S-T. It's like gold dust, I guess. And that has been kind of flattish. It's neither gone up much or gone down much. And I'm stopping to think, why is that, that gold isn't going down? Well, the first answer would be that the metals have already gone down so much. So that's a starting point. But then gold traditionally has been a store of value. And that was the big argument for Bitcoin, that it was going to be a store of value. And anybody that thinks Bitcoin is a store of value, you don't buy store of values that can go down 70, 80, 90%, which Bitcoin can do. And gold can go down, but I don't think it goes down 90%. Okay, that's not a store of value. That's getting rid of money that you don't really want anymore. And you would be better off giving the money to charity, and that way you get a tax deduction, and also you do some good in the world. So rather than buying Bitcoin, give the money to a charity, and at least you will get a tax deduction out of it. I think with crypto, it's just too early. Crypto reminds me of where the internet was in 2000. We knew it was going to be a great thing, but it was just too early. It took 20 years for it to fully develop. And I anticipate it'll be about that long for crypto to fully develop. The Fed recently came out with their projections of monetary policy on September 21st, and it looks grim. You know, they're saying that the GDP for all of 2022 is going to be 0.2%. Wow. And then out to 2025, it never gets above 1.8. Talk about anemic growth. You know, this is bad. And then they're predicting that inflation will be reduced to 2% by 2025, which I think is optimistic. But they say they're going to get there by getting unemployment to 4% or so. Man, if they don't have to get to at least 5%, probably to 7% to get inflation under control, it will be amazing to me. Going through all this has been quite an experience for all of us. There was a time where the market was trying to decide whether it was going up or down, and I had to watch it minute by minute and you make up for what I lost and come back again and go through that maybe a couple times during the day and throw major shares either way doing that. And I managed to come out positively doing that. just because I got to know SQQQ so well. And I don't need to do that anymore. I've put the 20,000 shares in on SQQQ, and I just let them ride. And I'm going to let them ride because I know once a crash starts in earnest like this, you may get a blip day here and there, but until we get the flush, until the VIX goes above, it should go above 25 always. When I'm shorting, if it's not above 25, I'm probably not shorting. That's if it does it for let's say for a day or two. But if it goes below 25, well, then the market's usually going up. But we need a flush, and the flush needs to send the VIX above 40, because the VIX is a prediction a month out of what the S&P 500 will do. And I've found it to be quite helpful in that way. So I'm just leaving the shares on until it looks like it's started somewhat of an uptrend. That's my story. That's the way I roll. This is not financial advice. I don't know your personal situation. You have to consult with your financial analyst, as I do. And good luck to us all. We're all going to need it in what is, I think, been the most difficult market until recently. It's not hard recently just because I know it's a crash now. It looks like a crash, it walks like a crash, until it starts to look like a bull run and the bulls start running. I'm standing still and staying where I am, and the direction is down, and look out below. Timber is all I have to say. Thank you for listening and watching. Be sure to like and subscribe if you find these videos helpful at all. And thank you for listening. Goodbye.